Happy Thanksgiving. I hope everyone's doing well. I'm going to make pretty big update here on US stocks and crypto. There's a ton to talk about. A lot of crazy stuff happening. Um, I have not made an update in a while on the stock indexes on my Instagram and Twitter. I've been mostly making crypto updates, but I figured, there's a lot to update on US stocks. We've been rallying for the last couple weeks, and I want to make a nice update. And I didn't feel like an update on Instagram would be sufficient. So we're going to talk about the whole thing. We're going to look at stocks from a 30,000 feet view perspective. Then we're going to look at the S&P. We're going to look at the Dow. We're going to break each of them down, the patterns, what we're looking for. And then we're going to look at crypto. Bitcoin has continued its bear market decline, as have the other cryptos amidst the FTX scandal and that whole blow up that's really sent all the cryptos tumbling after users of a very popular crypto exchange, FTX, have not been able to withdraw their funds, and that whole thing went down a week or two ago. And so cryptos are still down pretty bad. And they were already down pretty bad, given that they've been in a bear market since the all-time high. So a lot to cover, and let's go ahead and get right into it. All right, so first, let's just take an overall view of where we are with market valuations by looking at our Buffett indicator here. And according to this historical data, right now stocks are still considered significantly overvalued. Even though stocks have been in a decline for much of this year, and uh, relatively speaking, they're on a discount when comparing to early this year or late last year. They're still considered significantly overvalued when looking at the big picture. Again, stocks were at an all-time high at the end of last year, and so when considering how overpriced they were before, even though they are significantly less than they were last year, they're still, from a historical perspective, very overvalued. And how do we know that? Well, when we compare it to GDP, which is a measurement that has a lot of historical data, we can see that we are still well above GDP. And GDP, compared to the Wilshire Total Market Index, gives you a good idea of how overvalued or undervalued stocks are. And so we're still well above GDP right now. When you look at it from a percentage standpoint, we're right now still at about 156% of GDP, which is very, very overpriced. Again, when we take into account the Fed into the equation, assuming that the Fed's balance sheet really has that much of an impact, we are still well over 100% of GDP. So from whatever measurement you use, we are still overpriced, no matter how you look at it. Where are we trying to get to when we look at this data from a long-term perspective? We want to get somewhere on this bottom trend line where we're looking at between 75 to 50% of GDP. That's usually a good point, a good long-term buy, following a real bear market. So far, can we call this a complete bear market? Well, we're not looking at it very specifically, but just from this chart, here we have this uptrend since 2009, and still this correction here, which technically all this is so far is a correction, has not broken this long-term trend up. We haven't even taken out a significant low, and the last significant low, when looking at it from this magnitude, from the scale, isn't the last one was March of 2020, right? So I think once we take out March of 2020, now you can kind of say this is more than just a correction in a bull market. This is now definitely a bear market that has now at least broken the trend, and now you can start saying, okay, maybe we can start considering a long-term buy. But again, to me, this is still not broken any kind of important, significant trend. The trend is still up technically from this perspective. So that's why I'm not one to say that this is a great buying opportunity yet, because I'm expecting a pretty large bear market, and so far we've had a pretty big bear market wave when just looking at this chart. The question is, are we done yet? So let's go ahead and look at the S&P 500. Here we have the all-time high. Right now we're actually looking at the chart, and we're going to use some technical analysis to see where we're at. Well, since the last significant low, which was in March of 2020, right here, we can see that this correction since the all-time high is definitely a whole other wave. This wave is not a part of any of these subwaves down, right? When you look at this, this is a very significant trend. This is completely disproportionate from any correction that we had between 2020 and the end of 2021, right? Way larger than this dip, way larger than this dip, right? This correction is not a part of one of these small corrections, okay? So that's pretty obvious, pretty self-evident, but I just want to make that very clear. This is something bigger, right? This is not a part of a wave 5. This is not wave 1, wave 2, wave 3, wave 4, and wave 5, right? This is either a correction in itself as we go up in a much larger move, or this is just the start of a much larger bear market that is going to correct this last 13 years of price action since 2009. So that's where we're at least in my opinion. And so now the question is, what's the pattern? Where are we going? What have we done? Or what's next? So we have the all-time high here. We can connect this line here, the top, kind of give us an idea of where the trend's at. And we have three pretty good hits of this trend line right here. Boom, boom, and we're still below this trend line. So that's kind of interesting. The trend since the all-time high hasn't been clearly impulsive. Looks like this is like a three-wave decline, followed by a correction, followed by an impulse or another three-wave decline. You can call it a couple different ways. One way that you can call it is that this is just an ugly five-wave decline, something like 1 ABC 2 3 4 5, right? There's no overlap if you count it that way. If this is 1, wave 4 doesn't overlap, right? I'll make it a little clearer. Make it like that. I have a few other lines here just from my day-to-day analysis and trading and whatnot, but I'm going to make it clear what I'm actually talking about here. That's one way you could count it. It's not a very clean count, but it works, and that's a five-wave decline. And so you could call that wave 1 of the bear market. So technically, as long as we stay below the all-time high, there's a case that this is a bear market in its very early stages. And again, that's what I lean towards favoring, because again of my larger perspective from since 2009, looking at the chart, but also looking at the Buffett indicator. And I think the confluence of both of these arguments, I think, holds very strong. And I think we definitely need a bigger washout in stocks to really provide the correct foundation, the right foundation for another bull market. Bull markets are usually not born in still overbought territory. So we need to get very oversold, and still, relatively speaking, we're not even that far from the all-time high. And that's even clearer on the Dow Jones. I'll show that in a minute. But what? We are, let's take it from the all-time high where we're at right now. We're in rally territory. Yeah, we're only down like 17, 16, 17% from the all-time high. So, we're actually not even that far. This has been a pretty ugly, overlapping kind of decline. And so far, we had this three-wave move up. And it looks like we had another impulse down. And so far, this decline, or this rally since October, looks more corrective than impulsive. It's kind of a struggling rally. It doesn't. This looks like three waves. This looks like three waves. Yeah, more corrective. This doesn't look very strong. And then this move up, it looks like we had something kind of five waves, three waves, and we're going up right now in what I think might be a terminal rally, meaning the last rally in a larger rally. Looking at the short term, I'm thinking that we might have another dip and another move up. And if we break below 39.80, I think that's really bad news for stocks, given the context of the structure. What's my larger perspective on, what's the bullish case? Well, the bullish case is stocks always go up. That's kind of the bullish case because I don't think there's any other bullish case that that is really strong. I think the idea is the trend is still your friend, and so far this price action since the all-time high looks more corrective, and so that's the best argument that I can really give. I'm not clearly bullish on stocks right now, and I think that as long as we stay below this trend line, I'm very bearish. If we break above this trend line, again, it doesn't really change a lot for me. It just means that the adjustments in the short term and trying to navigate this market might change. But very, very bearish as long as we stay below this swing high right here. One index that actually has a little bit of a cleaner count is the Dow Jones. So let's go ahead and check that out. Here's the Dow Jones. And again, the same point holds true for the Dow. This is clearly another wave, right? This rally right here that we had broken below wave one. So we already know that this is something completely different. Now the question is this a correction before another big rally? That's really the main question. It's not that this could be any other kind of five-wave form from here and it's still ongoing. That's not really something that at this point I think could be considered. So here we have the Dow, and here we have the all-time high. So what's going on? Pretty ugly price action, right? Very, very overlapping. Every single wave over here is basically overlapping. So there are a few ways you can count it. One way that you could count it is that this was a leading diagonal. Okay, so something like this. So we have the first three waves connected by this wave right here. And then we have the third decline connecting to the top right here. So something like that, right? Or we have a 3, 3, 3, 3, 3. Or we have it's called a leading diagonal, where the price action converges into the first rally. So that's possibility number one. That's the bearish interpretation, where this is all the first wave, and then we have a second wave, which is taking the form of an expanded flat, A, B, C, and I'm just going to make this, I'm going to label all of this so it's very clear what the consideration is here. Something like that, where we could continue going up a little bit more, perhaps, and the idea would be that this is a wave one, and we'll highlight this, make it all bold and red because it's a bearish pattern. Cool. And then this is an ongoing bear market rally in wave two. and the suggestion, this count suggests that there's another decline, right? To go down, right? That's the idea. So that's option number one. It could also be where this is wave A. We'll do it like that. To be clear. Right? This could also be a wave A. again, the labeling and all that, it might it might sound a little bit complicated. But again, the idea is that this could just be a big correction where it's A, B, and then we have a big wave C, right? Or it could be just an all-out crash in wave 3, where wave 3 just goes, below 20,000, right? So the scale is not super clear. If I were to put my money on it, I would say that we are going to be heading below this wave B low right here. The question is the scale. However, if I'm wrong, that will be very clear if we break above the all-time high. If we break above the all-time high, now something entirely different is happening, and I would have to do a little bit of I would have to reanalyze the larger count and consider what all this is, but I'm not even doing that right now because, again, that's another 3,000 points away, and there's a lot more evidence suggesting that we are in a continuing bear market and that we shouldn't be taking this high out anytime soon. So that's my perspective. Again, it'll be very clear. If we break above the all-time high, completely wrong, and this correction is something different. It's not a leading diagonal. It's not a wave A. Yeah, that's kind of the idea. I guess it could be some kind of expanded flat. But again, this looks like an expanded flat. So I'm not really going to do a lot of consideration there. The other idea here, and if this is not the right count, another possibility, and this is actually kind of bullish because it suggests that we're not in a really big bear market, but that we'll have one more bear market. The idea is that we are going in a double zigzag, something like this. So we have a 3-wave decline, a 3-wave rally, and then another 3-wave decline. A, B, C, boom. So the idea is that that's the first decline, right? And then we're going up in an expanded flat. Same thing as the prior count. A, B, C. Something like that. And now we'll have one more big move down. So it'll be like a triple zigzag, right? Something like that, where we have another 3-wave decline going down, or 5-wave decline if it's a flat, right? So again, my perspective is that we do have another pretty significant decline that will likely take stock indexes to new lows at least below this level. However, I will know that I'm wrong if stocks exceed the all-time high before taking out another low. Now, again, the low, or the risk, I think, is to the downside. That's why I'm really focusing on this. I think there is a lot more room to go down than to go up, in my perspective. I've had that perspective for a while for U.S. stocks. The real question in my mind, assuming that I'm not completely wrong, is that how low do stocks go, assuming that they break below this key swing low right here that preceded this big snapback rally with both the Dow and the S&P. And, when we look at the big picture, there is a lot of room to go down. If this is all a 5-wave pattern, and now we're correcting this price action, let's look at some of the fib retracements that we would likely hit. And one of the most common fib relationships is the 38.2% retracement. So let's just look at all of these real quick. And let's hit the 38.2. All right, 38.2. This is pretty modest right here. 38.2 at 3,200. Pretty modest retracement. If the S&P and the Dow are kind of going in this ugly, big, elongated 3-wave move where it's like an A, a B, and then a C, this is likely where we will go, right? It's not like we're going to be crashing all the way down if this is just a 3-wave move. If this is 1 and we're going up in this ugly 2 and then we go down in 3, that's probably where we'll go. But if this is a much larger bear market, right, which is something that I've suggested is a very real possibility, then we could easily be going down much, much further. We have these other retracements here. Again, 2,700, 2,200. These are all very, very possible. My base case is that the bear market will at least go below 2261, and that's the March 2020 low. That's been my perspective, because I think that's the last significant correction in the preceding 5-wave impulse. And I think what's even a more important zone is this right here, which is the preceding 4th wave of 3. This is always a very important zone in a rally. It's the wave 4 of 3 low. And so this zone, I think, will be very, very important. This could be a good buying opportunity, potentially. And it's something somewhere where we'll probably get some kind of snapback rally at the very least. But that's because oftentimes a correction gravitates towards the previous 4th wave of 3, the previous small degree 4th wave. So here 1, 2, 1, 2, 3, 4, 5, expanding triangle, 4, 5. So if we subdivide the 3rd wave, we have 1, 2, 3, 4, 5. So this 4th wave right here of 3 is oftentimes a very important support zone for the following correction after the 5-wave move is done. So that's why I'm talking about this zone right here. So that's my opinion. I think the 2100 to 1900 zone is very, very important, and that's where I would say is kind of the conservative target, assuming that this is a substantial bear market that's correcting a 13-year bull market. That's just what the technicals show me. But again, I think this 38.2% retracement around here at 3,200 that goes below the 2022 low, I think that's minimum. I think that's a minimum requirement for me. But again, I understand that this could possibly be a wave 3, which means the wave 3 would be much larger than this first decline that was what, a 22% decline from the all-time high. So we could be in for a very, very heavy bear market, one that a lot of people aren't expecting. But again, the trend is your friend. I don't know. I really don't know another way to count this, if this is a bull market that's continuing. But my plan is to kind of worry about that later. If that happens, if we break above this trend line, break above the August high here in the S&P, if the Dow breaks above the all-time high, then I'll begin to contemplate that and really just look to adjust. But for now, the pattern still looks like a bearish pattern, and I'll adjust when necessary. So that's my perspective with US stocks. Again, we're still significantly overvalued. The Dow is showing an ugly pattern, but not a pattern that has confirmed that a bull market has begun again. Definitely not. And the same thing is for the S&P, and the NASDAQ even looks more bearish, but I'm not going to get into that just because I don't do a lot of trading with the NASDAQ specifically, so probably not the best person to talk about that chart, since I just don't focus on it as much as the Dow and the S&P. So now let's talk about some crypto. So again, crypto has been absolutely pummeled by the FTX fallout, and we have continued to make further lows. Since the all-time high, we are down about 75%, 76%. We got down as much as 77%. So we're pretty near the lows. So what's the idea here? What's the pattern? Well, here's the all-time high. And since the all-time high, we have gone down in a pretty impulsive looking pattern. Now, I've seen some other perspectives that we could possibly still be in a bull market. I don't agree. I think the pattern went something like this since 2018. 1, 2, 3, 4, 5. That's my perspective. I think this has been way too large and impulsive of a structure down that I do not think it would be very wise to try to count it as something like this. Yeah, this is not. Now again, it looks even worse because we're on arithmetic scale, but if I change it to log scale, it doesn't look as ugly, right? Possible, but again, we've gone so low. We've gone so low. We have not broken the wave 1 high, to be fair. We have not broken the wave 1 high. It's possible that this is an expanded flat, A, B, C, 1, 2, 3, 4, 5. There are a few problems with this, but regardless, I think it'll become very clear pretty soon that this is not the pattern. But again, it's something that I'm not going to completely write off just because it's still technically valid, right? But again, this is not my perspective. This is not what I think is the most likely count. I think this is probably the most likely count, even though, again, this count has some drawbacks as well, such as wave 4 being very short. This one might actually get to the point where wave 4 is a little bit long. Not too long, but, you know, we're talking, 18 months-ish, right? Compared to only 3 months, right? Both are kind of a little extreme, given that wave 2 is about 9 months. So pick your poison, but I would say this wave has been much more characteristic of a bear market. It's very hard to imagine that this is all just a correction in a larger bull market when looking at the time scale. But anything can happen, right? So this is a possibility. But regardless, I'm expecting some kind of 5-wave pattern down, and so far we haven't gotten that. So I'll explain why that is. We're going to take it down to the daily. And actually, before we go down to the daily, I'm just going to go ahead and write out the pattern, right? And I'm really just focusing since the all-time high, because I think before that, it's kind of just gets a little unnecessarily complex. So we try to count it from the all-time high: wave 1, wave 2, wave 3, wave 4, wave 5. Okay, here are a few problems. First off, this decline doesn't really strike me as impulsive. Now, I just made a post, I think a couple days ago. I think I've got the note right here because this is very recent, where I made this post where I'm trying to make a potential 5-wave count of this, where this is the leading diagonal: 1, 2, 3, 4, 5, a 1, 2, sharp wave 3, triangle wave 4, and then this tiny little move down was wave 5. It's possible. It's also possible that this is just wave 1 of 5 before we go up in 2, down in 3, 4, 5. Again, I think one of the major problems is just how disproportionately large this wave 1 is. Again, it is just more characteristic of a correction. Now again, how can we have a correction in a 5th wave that takes out the prior impulse decline, the prior impulse low? Well, that gets us into the expanded flat, the running triangle, the running flat kind of territory, where this could all still be one pattern that's developing. And I've been talking about this for literally months, where this could all still be, some kind of A, B, and then we go up in a C that either takes out the wave this high or doesn't take it out. We could form a lot of different patterns. So it's a little complex, but here's the point. The point is that Bitcoin, no matter how you count it, right? Whether you count this as a really ugly 5-wave decline, or you count it as, or you count it, let's just say it like this, as a 5-wave decline that's still in progress, right? Where wave 4 is stretching out into either a running flat, right? And then takes out a low, or it forms an expanded flat, or it forms a running triangle where we stretch out in something like this: A, B, C, D, E, right? Like there could be so many different ways that this pattern goes, but the point is that the downside risk is starting to decline heavily, and we could have a very nice rally in the near term. It might not be something huge, but I think right now the upside is actually much greater than the downside in, let's say, the next couple months. That's my perspective right now. Because again, if this is a wave 4 and it's, a shallow correction, again, there's still opportunity to be made, and then it could be dumped before we have a wave 5 decline. Or this also could be something like an A, B, C, right? And then we form some kind of 3-wave or some kind of triangle pattern where this is all wave W, right? And then we have a wave X, counter trend, bear market rally, wave X. And then we have a wave Y that finishes off the entire bear market, right? Very, very possible. But again, we're going to have upside regardless of which count happens. So I do think we have reached a point in crypto where there's actually much more upside than downside, at least in the short term. Again, I'm not saying the bear market's over, but there is upside. Now, for the most bullish perspective, is that this is the ugly wave 5, right? We finished a 5-wave decline at all scales, right? And this is an A, B, C expanded flat. And now we're heading up to all-time highs in a wave 5 to finish off the 5-wave pattern since 2018. That's a possibility. It's technically valid and not completely disproportionate from the rest of the structure. It's possible. Again, not favored in my perspective, especially when you look at Ethereum. So we're going to look at Ethereum too, but again, I want to make it very clear that Bitcoin right now, I think, has some upside potential. And I'm just really excited to start really clearing out this pattern, really making it clear what this pattern is. The more I look at it, the more I think it's actually quite likely that Bitcoin will not take out this 13,000 high, this 14,000 high, until the last wave of the bear market is actually occurring. And I think that makes a lot of sense because I think it's just right for the technicals to allow for the possibility that this is a big expanded flat wave 4 high. I just think it's right. I just think it's right, just for that possibility to still be out there, to try to take as much money out of the market as possible. I think it just makes sense, which is why I am sticking to this pattern. But again, I'm going to be keeping an eye on all possibilities. And this looks like a corrective decline. And this is why I personally, if I had to put my money on it right now, believe that it's more likely that we do have some kind of ABC forming. Now, whether this is an ABCDE, whether it's an expanded flat or a running flat, right? Running flat or expanded flat, regardless, I think it's more likely that that's what's happening right now. And this could be an expanded flat or a running flat of wave 4, right? 1, 2, 3, and this is 4 that's occurring right now. Or it could be ABCW, that's the first wave of the bear market. This could be ABC or ABCDE, wave X of the bear market. And then we have another ABC decline in what ends up being a complete double zigzag bear market. As you can tell, lots of possibilities. This is not simple. Lots of possibilities, even though we have a very clear 3-wave completion of the bear market, right? Very clear 3-wave completion. But the reason why I don't think it's done yet, 3 reasons. Well, at least 2. 1, this is not enough of a bear market to correct 12 years of price action. 12, 13 years of price action. Since 2009, where bull market, where Bitcoin began. But also, this does not yet look like an impulse. All right. So it looks like basically this is a low that is not the ultimate low. So that's just another reason why I think this bear market still has more legs in it. And again, there are opportunities to make money in both directions. Even during a bear market, you can make money on the upside in a bear market. You can make money on the downside in a bull market. But obviously, you want to be more careful when you're fighting against the trend, because it's going to be tougher to make money against the trend, right? So just a little 2 cents there. But now let's check out Ethereum. All right, so here is Ethereum's long-term price chart. This is the weekly. And here we have the all-time high. So we can tell, right? This is the bottom of the last bear market. This is a complete bull market. This is not a part of this impulse, right? It's just not. Now we can go to the monthly and really check this out. I actually haven't done this, so I'm just going to do it with you guys real quick, especially those that are interested in Ethereum might appreciate this. So here we have the Ethereum price chart. Okay, I won't even lie. It's possible. It's still possible that this is an ongoing bull market. It is possible. I thought it was only possible with Bitcoin, but it is. Here's wave 1, wave 2, right? Wave 2 doesn't go below wave 1. 1, 2, 1, 2, 3, 4, 5. 1, 2, 1, 2, 3. So you could say, yeah, you could just say that's all 5 waves. Fine. And you could say, this is a 4th wave, and then we'll go up to 5. 1, 2, you could say that. It's actually valid. Obviously, you could also say that that's wave 3, and that's wave 4, and that's wave 5. You could also make that argument. That's kind of the obvious argument, but there is one thing that's kind of a little bit not great about that account, and that is that it's much, much shorter than wave 2. Wave 2, 1, 2, 3, 6, 7, 8, 9 months, and wave 4, something like 2 months. Yeah, I mean, this actually looks like a cleaner count. So I haven't done enough long-term analysis on the Ethereum price chart. I've basically done 30 seconds, which was with you guys just now. But the whole reason why I'm actually pointing out Ethereum's count here, because I focus mostly on Bitcoin. So that's because of the price action, and obviously I meant putting it right here, right? Yeah, and then we have this 5th wave. That's the idea that some could argue, right? Then we have this 5th wave. So if we take it from the all-time high, we go on the weekly, break it down just a little bit more. It looks like we've had a very clear 3 waves down, just like with Bitcoin, right? 1, 2, 3, or A, B, C. Same exact thing with Bitcoin, except for one very important thing. Bitcoin has made new lows. Bitcoin broke below its June low very recently, 2 days ago, right? Boom. We'll take it here. Bitcoin is already, if you avoid looking at the subdivisions, right? Bitcoin's made something that looks like a five-way decline. 1, 2, 3, 4, 5, right? Bitcoin broke below its June low, while Ethereum has not broken below its June low. Here's its June low, and here Ethereum has also been declining, but it has not made a new low below June. So this is what we call an intermarket non-confirmation. So one ticker in a market or in a sector has made a new low while the other hasn't. And usually when that happens, it's a signal of a trend that is weakening. Right? So we had these three waves. Bitcoin went up, Ethereum went up, but Bitcoin made a new low, and Ethereum is still well above its previous low. And this could be signaling that the larger trend, which is down, is actually weakening. Something that is also very important is that the decline since August here, not only in Bitcoin, right? Because I was saying earlier how this move since August in Bitcoin, yes, you could get creative like me and try to make an argument that this is a five-wave decline where we have this disproportionately large leading diagonal, one, and then you got this 2, 3, 4. Like you can make the argument, right? But it's ugly. Okay, no one's denying that this is extremely ugly. So we have Ethereum. This also looks very corrective. Very, very corrective. Now, I won't say that this doesn't look very corrective. Like this could also be corrective, but you can make an argument this is a five-wave move up. Easily, that's 4. But here, this decline, very, very corrective. So this is great confirmation, right? We have a non-confirmation in the market signaling that the trend down might be weakening, at least in the short to medium term. And then we both have two declines, the two largest cryptocurrencies having declined since August that look very, very corrective. So in my eyes, I think it's very possible that Bitcoin and Ethereum will have a rally to some degree from this point on. I'm going to do a little further analysis here again. This rally from June has a lot of impulsive qualities. Look at this. 1, 2, make this 3, 4, 5, right? Or you could also make an expanded flat wave 4. Again, you can see 5 waves up. And then if you stretch that out, so that's all wave 3. And you just stretch it out. There you have. Come here, buddy. There you go. You have a 5-wave move up. Right? Very, very solid account for a 5-wave move up. 1, 2, 1, 2, 3, 4, 5, 5. You make the argument that's a 5-wave move up. Now you can't make the same argument with Bitcoin. This rally was not a 5-wave move up. And I actually talked about this count. I had posted on my Instagram as a triple zigzag. Very, very complex count. But again, not a 5-wave move up. Ethereum, 5-wave move up. Bitcoin, this ended up being a 3-wave move up, right? A, B, C. Then we have a running flat, A, B, impulsive C. Then we had another 3-wave move up, A, B, C, that's for Y. Then we had a triangle, freaking running triangle, A, B, C, D, E, and then another A, B, C wave up. Very, very complex, basically the opposite of an impulsive wave, right? Just extremely ugly and corrective. So, given that, the following move after this counter trend doesn't have to be a move that exceeds this. But if Ethereum has an impulsive wave, then the following wave should not break below this impulsive wave's origin, which means the idea is that Ethereum should first break above this impulsive rally high before possibly going down further. So this is a pretty interesting combination of charts looking at how Ethereum and Bitcoin differ in different parts of their progressing structure and past structure. Right now, we've seen that Ethereum started to rally. It's very possible that you could count Bitcoin as a complete double zigzag decline, where we have something like this. We have a three-wave decline, right? A, B, C, that's W. Then we have an expanded flat, A, B, C for X. And then we have a three-wave decline. Wave 1, triangle here, and then a small impulse down right here, and wave Z, which did take out the low. And now we could start a pretty substantial rally. It's going to become even more bullish if Bitcoin breaks above this the completion of this triangle, which is at 16,800 right here. Bitcoin breaks above this level, lots of room to the upside, and it'll start breaking some of these other counts that I have, which include well, if we break above this, it will definitely break the count. This could be some kind of wave 1, wave 2, some larger wave, 5-wave decline. So it's not going to be 1, 2, 3, 4, 5. We're not going to go down to like 12,000 most likely if we break above 16.8. Also, with Ethereum, something weird again. Ethereum didn't make a new low when Bitcoin made a new low right here. Bitcoin broke the low. Ethereum held above this low by just like a couple bucks. So there are definitely some risks with this count, right? If you're like, my trade setup is something like this. I'm actually just going to show you guys. Anyone that's still watching at this point deserves to see my trade setup. Again, it's not financial advice. It's just what I'm actually doing. But basically, it's a double zigzag. That's my count, where we have 3 waves down, 3 waves up, another 3-wave move down. The problem with this count, and why a little bit of a downside with it, is that this 3-wave count, this wave Y following the triangle, didn't break below this low. Like I was saying, Ethereum did not make a new low here. And so it's still possible that this could stretch out. But again, the key is that Ethereum doesn't break below 878. If it breaks below 878, now a lot of things open up. There are a lot of different possibilities, and the trade setup becomes much less clean. And I like clean setups. So even though my opinion on Bitcoin and Ethereum being oversold wouldn't change, the qualities that make something a good trade setup wouldn't necessarily exist. Because it would just open up so many possibilities. If we break below this low, there could be so many different accounts, and what the target is. Right now, I really like the setup because I think minimum requirement where I would look to actually take profits would be breaking above 1677. But I think it's actually very likely that we could break above 2000. Again, this is like a several month kind of trade. This went up from June to August, so something proportional to this possibly following this decline. But it's also hard to wrap my head around that possibility when considering the very real possibility of a stock market crash during the same time. So kind of begs the question, can cryptos rally big while stocks crash? I guess we'll see. But where we're at right now, here's the low right now, the 2022 low for Bitcoin. And it looks like we've gone up in a 5-wave pattern following this low. So this makes me pretty bullish on Bitcoin in the short term. Again, this is a short term. Very important that I make that clear. But it does look like a 5-wave pattern of sorts. Got a wave 1, wave 2, wave 3, and you could actually break that down. 1, 2, 3, 4, 5. Again, the short-term count, how you subdivide it, might change. But again, that looks like 5 waves up, and then a 4th wave, and then another move up, and that looks like an impulse. So we might correct from here on out, in a wave 2. This is wave 1, wave 2, and then we go up. But for this count, it's very, very key that Bitcoin holds above 15.4, or else a lot of these other possibilities still remain in this post right here. So again, that was posted on my Instagram, my Twitter. If you're wanting more information on that, and that's where I post a lot of my short-term updates, check out the description of this video. I'll have my Instagram and Twitter there for those wanting some short-term updates, usually on Bitcoin, just like kind of looking at the crypto market. I hope that my updates on the US stock market were helpful. Please let me know in the comments if you guys have any questions, or if you guys want to share your perspectives on where you think the stock market is based on the cycle, whether we're at the tail end of a bear market, whether we're at the beginning of a bear market, whether we're at the beginning of a bull market, whatever your opinion is, please feel free to share it. And yeah, right now we're in a very interesting time, especially in the crypto and stock markets. And that's why I wanted to talk about today. Lots of possibilities, but lots of opportunities. Lots of opportunities. And I've really enjoyed doing my best to map it out. An update on my Instagram. I've really enjoyed that, and it's been a journey. It's been a real journey, and here we are at another interesting juncture, right? Very key time. So many opportunities, and it's just cool. It's just a cool time to be in, especially if you're able to make adjustments. You're not at the mercy of the market, right? You're able to make adjustments and protect yourself. Choose the risk that you're comfortable with. Choose the setups that you feel like you understand that work for you. I mean, it's a cool time. A cool time indeed. So I would also love to hear your opinions on crypto. Like super key to hear your perspective on crypto right now, because crypto is really the thing I'm thinking about the most. I think the stock market seems to be much simpler in terms of its pattern, just because of how cut and dry it is. It's like, well, yeah, we might make a new all-time high, but as long as we don't, it's like the downside potential is just insanely high. But with crypto, we're clearly in a bear market. The magnitude, sure, is still a little bit controversial, but it's very clear that we're in a bear market. So being able to find some of these, 8.5 to 1 opportunities is tough, especially in a bear market. But the possibilities are high that we could see something pretty big in the short to medium term, when not taking into account any of the other noise, any of that. Just looking at the market itself, especially following all of this terrible news with FTX and people losing so much money, and that really kind of decimating the markets. Makes a lot of sense that there could be that could have kind of squeezed out all the weak hands, and that we could see a pretty significant rally. And we've already seen a decent rally just in the last 2 days. The question is, can we actually start getting another swing? Right? Because we've had a swing up since June. We've had a swing down since June, right? There's the swing up, and here's the swing down. Are we going to have another swing up? And that's kind of the question. Is the swing up going to take out 21,000, or are we just going to continue grinding lower? And right now, my opinion is that it's more likely that we're going to have a swing up. But again, anything can happen, and I'll be sure to continue updating on my Instagram and Twitter as new information presents itself and as we continue on this journey. So I just appreciate you guys for tuning in and for sharing your perspectives. I know I haven't been posting and doing a lot. I've just been doing a lot of traveling and just in a busy time. I'm really just trying to hone in um, on some of this analysis and becoming a more consistent trader. Tough, but I really enjoy it. So it's like, that helps. Um, but yeah, that's it. That's the whole update on stocks and crypto. Please let me know your thoughts, and I'll see you guys next time. Enjoy the holidays, all right?